Hi, good afternoon, everyone. Welcome to our section for today. Together with you is me, Elki, on today's section's February Market Compass. All right, okay. So again, welcome to you guys to our tonight section today. Okay, tonight's section should be a more casual one, whereby we will be trying to create this is actually a new section whereby we are trying to create a platform for our clients, for our followers, uh for our supporters to join us and discover what are the things that are happening in the markets, whereby we can talk about the markets, we can have some Q&A about the markets. So hopefully we can create a more interactive session together, and through the section we able to share some insights, able to discover some opportunities in the markets, and hopefully together we can achieve a better month together. Okay, so this is a monthly event thing, whereby today our session, this is our first one in 2026, which is our February month market compass, and we will do it on the first business day Monday of the month. Okay, yeah, so it just happened that last Monday it was a public holiday, so we do it today. Okay, yeah, but it's good also, right? For the past 10 7 8 9 days, we have quite an eventful market. Yeah, so today we can talk about it. Okay, yep. So my name is Alki. Okay, together with you guys, I believe today many of you all right here that attending the sessions, the questions that you guys have been trying to ask, or you guys have been wondering, is we had a very strong month in December and also in January. Okay, but is this strong buying interest that we've been seeing in December, in January, are they able to sustain and even continue extend into a bull run for the year 2026? Okay, so the team that I'm putting up for February, this section, it will be sustainability. Okay, yeah. So today we will try to look into some of the events that happened in December, in January, and then we will look into all these events and see whether are we going what can we expect for the month of February, or even coming months. Okay, so before I start the section today, let me introduce myself. For some of you guys that haven't been meeting with me or haven't been attending to my sections. Okay, my name is Elki and I'm your speaker for today, tonight. Okay, I've been in this industry slightly more than 10 plus years. Okay, I started as a futures dealer, and eventually I've been lucky to be the chosen one to um grew to be the speaker for my products, and I've been doing trading, train as a prop traders, sharing my technical knowledge, technical trading skills, all these things since then. Okay, yeah, so it's quite an eventful journey. Okay, for the past 10 plus years. Okay, and now today I'm here to with you guys today, share with you some of the things that how we can look at the markets, and how we can grab some of the opportunity, or even discover some of the opportunity that we might come across in the month of February. Okay, yeah. So today's actions, as usual, it's solely the opinions. It's my opinions. Okay, so any of the stocks that I'm putting up, or we discuss, okay, it shall be treated as a general information, and also it's more towards for education purposes only. All right, okay, please do not take it as personal investment advice. Okay, yeah, because as a dealer, we shouldn't give a public investment advice. Okay, yeah, so if you really interested, want to know how to engage in market, or you need some more advice, okay, you can always feel free to find me or my team. Okay, we are from Berjaya Securities. Our office is located at Berjaya Times Square. You can always, at the end of this section, I'm gonna share with you my our number. You can always ring us up, walk-ins to look for us, and then we can carry on from there. All right. Okay. Yeah. Oops. Okay. Okay. All right. Okay. So just now we talked about like we had a very strong month in the month of December. Everyone witnessed the FPM KSM Malaysia Index, Malaysia Blue Chips Index has broken into a level that we haven't been seeing since 2018. Um, we are heading towards 1800s. We are seeing that the index you can see from December right over here from 1600s all the way until recent high about like 1770. All right, that's 160 points gained. Okay, yeah, uh, that's more than 10% already in within just 2 months. Okay, so but is it really that our market has been so strong, and what actually have been driven the movement? Okay, yeah. So if we look into small cap, the small cap it tells otherwise. Yeah. Okay, so when we started to see the FBM KLCI, the blue chips index started to move higher. Similarly on small cap, we are seeing the movement as well. The small cap, FBM small cap actually have rebounded from 15,600s all the way to 16,400s in early January. Okay, but we can see that the reason selling has been really it has been really harsh towards FBM small cap in comparison to what we are seeing on the FBM KLCI. Okay, yeah. So we are seeing at this moment, at this juncture, market has been really being more friendly towards to those who has investor that has been investing into blue chips, into some of these stronger fundamental counters. Okay, but for those who are trading trying to do short-term trading, or they are picking up smaller counters, they might not be benefited as much as those who are investing into all these blue chips fundamental stocks. Okay, and the reason why um is at the beginning of the December, why we are seeing this run up is mainly due to a window dressing activities. Okay, we know that 2025 it has been really harsh to most of the traders in the markets, whereby we experience all these trade tariff issues, and then we have geopolitical issues happenings. Okay, yeah. So all this has been dragging on the markets, and regardless how well the company has been doing, okay, only selected counters, selected sectors, they have been able to outperform. Okay, but most of the sectors, most of the counters, they have been it's either they're trading in a yo-yo manner, or they have been trading into a downtrend. Okay, so when it comes to the month of December, okay, so typically what we are seeing is the some of the insti funds, some of the fund managers, they have been coming in to perform this thing called window dressing activities. Okay, whereby they are changing into some good counters and driving up the index. Okay, so in the month of December itself, okay, we are seeing the index it actually moved 3.3% higher month on month. Okay, despite that, we are seeing the foreign funds they have been selling. They are still the net seller in the month of December. Okay, so when it comes to when what happened in December is probably retail, the local side they have been buying not only just buying the blue chips, but also the small cap counters we have been buying. Okay, but when it comes to the month of January, okay, things has changed. January, we are seeing foreign funds has been turned into net buying. Okay, the very first time since September 2025. Okay, and what is so interesting about this is when foreign fund they come in and buy, guess what? Do you expect the foreign fund gonna buy our small cap counters? Nah, it's very unlikely they're gonna buy all these smaller cap because their fund size is so huge. If they go into any of those small cap ones, Okay, they will be the sole buyer, and no one else can actually buy can actually buy from them and trade along. Okay, so they can only focus on all these blue chips, which is big enough for them to get in and get out. Okay, yeah. So this came amid the US Central Bank, US Federal Reserve, they have cut rates, and these actions has pushed the funds to go into ASEAN, okay, looking for some of these countries, especially like Malaysia, okay, with a stable political background, okay, and also our Bank Negara in December has been holding on our overnight OPR, okay, so all this it creates the environment for the foreign fund to come in, and also they have been doing it more aggressively in anticipation that there will be more rate cut in 2026. Okay, if you can recall, during that time, President Trump has been putting up not quite a few. Okay, not him has been putting up. The market has been putting up some of the speculations who could be the next Fed chairman. Okay, and many of those names, they are very aggressive rate cutter. Okay, they are really looking to cut the rates, and with all these expectations, okay, the dollar has been really uh losing their strength. It has been it has been declining. Okay, and we have been seeing more outflow from that towards ASEAN and towards into Malaysia. Okay, yeah, and all this also come in line whereby we also provide a very resilient economic outlook. Okay, whereby thanks to Prime Minister Anwar. Okay, with all these policies, ongoing policies, more accurate allocated s- subsidy uh sorry more allocates funds. Okay, uh we are seeing lower fiscal deficits. Okay, and also we are seeing our country has been achieved a better than expected fourth quarter GDP. Okay, and also amid the weaker dollars, we are seeing a stronger ringgit as well, which it helps all this private consumption growth, protecting our spending powers. Okay, and help some of the sectors in the markets like consumers, like banks, all this. They have been performing. They have been doing better. Okay, yeah. So in under all these factors, all this environment, we are seeing the blue chips, the banks, they have been outperforming in these 2 months, and also some of the analysts have been talking about, okay, we're gonna have a better year 2026. So this is time to shrug off the negativism, the bearishness for 2025, and try to put in more money in 2026. Okay, yeah. So what the analysts and what the market they are expecting that could be happening in coming months. Okay, personally, I'm quite agree with what has been putting up in the markets in the floor. Okay, which is our ringgit strength is likely to sustain. Okay, I believe ringgit strength is something that everyone has been talking about and also asking, saying that, hey, Alki, some of my client actually they ask, hey, Alki, the ringgit has been strengthened from 4 point something to right now 3.91, or 3.91 or even lower. Okay, is this sustainable? Are we gonna go back to four? Is this just a temporary thing? Okay. So what we are seeing right now is with our stronger macro economy, okay, we have been doing really well, okay, and also in the expectation of a further rate cuts by the US, okay, by the US Central Bank, and as for our Bank Negara, we can very likely to hold our OPR rates still, okay, unchanged. Okay, with all this contributing towards it, we are likely to see our ringgit strength to sustain. Okay, or even strengthen further. Okay, but right now we are seeing more towards a stalling, a stalling after a strengthening in the ringgit. Okay, yeah, especially after Kelvin Walsh has been nominated, and the the aggressiveness in rate cutting, okay, that has been discussed by the markets, it wasn't as aggressive as what the market has been expecting. Okay, so right now the dollar is taking a sit back. Okay, making some rebounds. If you look into some of the dollar index charts, okay, yeah. So at this point, we should expect ringgit to sideways, but it is likely to able to sustain. At least you should be able to sustain below 4. Okay, it might probably hovering about 3.9 to 3.95, 3.96. Okay, yeah, but we might it stands a good chance that we will see it stay under 4. Okay, so under this kind of circumstances, we should expect that some of the counters like consumer, like banks, like some of the company with heavy US borrowings, denominated the borrowings in USD, okay, they should continue to be benefited. Okay, yeah, so those will be some of the thematic, some of the companies that we might really want to continue to stay focused on and look into it. Especially like last week we had quite some selling off. Okay, market has been making some pullback. Okay, we can see that from the um KLCI index just now. Okay, that actually poses a good opportunity for us to look into some of these counters. Okay, yeah, especially we also expect our the analysts also expect this year we should continue to see good condition and also improving economic conditions. Okay, whereby this year we should see the global tariff tension is, it wouldn't be as terrible as what we are seeing last year. Okay, things are pretty much settled down except for one and two with other countries, but not with Malaysia. Okay, Malaysia wise is quite settled. Okay, yeah. So with that ease of tensions and also with our national policy pushing a few tariff like NETR, like NIMP, all this, we should continue to see our Malaysian economy to grow in what's being projected. Okay, uh, not only that, we are also seeing a very resilient private consumption growth. Okay, our domestic demand has been strong. Okay, and some more this year, we are pushing for Visit Malaysia 2026, which we are seeing a very strong growth in the visitors last year. And as this able to continue this year, we should see the consumption to continue to grow, consumer demands, all these things will continue to grow higher. Okay, so you can see we have been continue to touch some of these sectors, some of these counters that you know that these are some of the, at least this is the thing that we have to look at it for the next 1 to 3 months. Okay, because that will be where the market is. Right. Okay. So this is the chart of the dollar USD ringgit. Okay. So we can see that the despite the recent rebound from 3.91 to 3.95, because there's some recovery in the USD after Kelvin Walsh is being nominated. So, okay, we can see that ringgit remains strong. We remains continue to strengthen. So that's why we might expect ringgit to hover between this area 3.9 to 3.95. Okay, we might even see a break if there's a change in the expectation on the um dollar. Okay, but if we are comparing to our um currency peers as well, we are ringgit is actually doing really well compared to others, and that actually give give a very good upper hand to some of our business that has been focusing on importing raw materials, okay, from other countries. They will be able to enjoy a better profit margin from that. Okay, so we can see that the ringgit has been strengthening since November and all the way until February. Okay, so we shall expect that in the month of February, okay, taking cue on this strengthening of the ringgit, some of this business that has been importing raw materials from other countries, they should be able to benefit from better profit margins. Okay, like example for today, I think British American Tobacco has released their results. Their results, I just now I had a glance. It should be better. Okay, so these are one of the counters that have been benefited from it. Okay, and there are more counters. Which one of them I believe should be Mr. DIY. Okay, so these are some of the counters that we could look into and also position ourselves in before any results being released. Okay, but if you really intend to do so, you really want to study into it to find out if there is any other factors that can overshadow this ringgit, this forex factors. Okay, it could be they have some shop being burned. Oh, sorry, touch it. Just an example, not to curse Mr. DIY or what. Okay, it could be many other external factors that um affecting their results. Okay, but if you there are so many businesses that are importing raw materials from other countries, so you can cherry pick some of them and look into it. So if all the factors, if they remain the same, but just forex we are seeing they are benefited from the stronger ringgits, then their results should be better. Okay, yeah. So amidst a stronger ringgit, we are seeing that the banks is actually one of the key beneficiary as well. Okay, because with a stronger ringgit, with a more stable political background, okay, it actually increase the confidence of foreign funds into towards Malaysia banking system. Okay, uh, so that's why we are seeing as it comes into the month of December, we are seeing finance index, okay, financial services is actually the most outperforming sector in the markets. Okay, yeah. So even at this moment, if we look into the chart wise, we are seeing that it is going on a strong uptrend, and there is no sign of retrieving yet. Okay, even though we are seeing some of the red candles right over here, but we can see quickly we have a bullish engulfing, and it continue to hover near the high. Okay, possibly we might see a continue further breakout, and it continue to trade higher for all these banks. Okay, for maybe another 2 weeks to a month. Okay, and if we look into if we comparing Malaysia banks towards regional banks, okay, we can actually see Malaysia banks project PE PE wise price per book, okay, is all actually still at a quite attractive level. Okay, and our dividend yield is also at quite fair. Okay, if 5 point something. Okay, yeah. So with our political stability, it actually is a good channel. It's a good destination for foreign funds. For them to come in, and invest in Malaysian markets. Okay, uh, yeah. So not just about the foreign funds, but if we look into our local banking industry as well, they actually if you look through one of the this article in the Age, okay, they actually highlighted the 5 things that we should really look out for the banking industry. Okay, yeah, and with the anticipations that the OPR rate gonna stay unchanged. After last year we had uh we hit after last year, okay, we are expecting central bank Negara to keep the rate unchanged. It is likely that the net interest margin, the potential NIM will be expanded, okay, and have a better and profit margin for all these banks on a more stable and OPR outlook. Okay, and also if you realize in this year July, the Bank Negara will have a new framework on the credit risk management sites, whereby they will require some banks, not all, okay, some banks that they actually have slightly a little bit more excess capital, okay, they will have to return it to their shareholders, okay, and that could create a string of higher dividends distributions during that time, and hence it will continue to lift up the industry, the banking sector. Okay, not only that, if you do realize follow some of the banks stories, their developments, their news, okay, we can see that there are banks that have been getting uh tractions, attentions from foreign banks, okay, and also some of the potential M&A been discussed, widely discussed in the industry. Okay, so with this potential M&A going on in the markets on the banks, that actually stir and also create the trading interest into it. Especially this year, as these 2 years, we are seeing there are a number of corporate actions, M&A, all these things are taking place. Okay, after Malaysia Airport being privatized, after getting Malaysia, they failed to privatize. Okay, they tried to privatize it, but they failed. Okay, and right now we have Sunway and IGM trying to merge, and there are also other parties that seems to be interested. Land being privatized. Okay, they are it seems like these 2 years are the time whereby a lot of all these companies, they are trying to restructure, and they are looking into M&A as a channel for them to grow and expand. Okay, yeah. So are we gonna have a major mega M&A happening among the banks? Why not? Okay, it's really possible, and if one of this story happens, it will actually keeps the banks continue to stay under the radar. Okay, so although banks could be boring for some traders, okay, yeah, but this year it could be quite happening for the bank industry. Especially, we are seeing some of the digital banks, they have been in the markets for 2 years, 3 years. Okay, so after they have been more settling down, this year could be the year they will try to push a little bit more. Okay. Yeah. So whether it's good for our traditional bank or not, then that will be another story. Okay. Last but not least, in the article, they also talk about there will be a look into this credit act, okay, about buy now pay later regulations on some of these unlicensed lender. Okay, so if this this would be something that's being really um being something regularized, and it needs the bank to chip in to run all these schemes, and that could be an additional minor source of additional funds business for the banks as well. Okay, so these are some of the issues, some of the things that we might, for any of you guys right here who are interested in to trade into the banks, these are some of the aspect that you guys might want to look into it. Yeah, and I think trading the bank counters, bank sectors, it could be really interesting this year. Okay, yeah. So other than banks, okay, REITs is something that's, I think is something that's worth looking at for this year. Okay, although rates for many of the traders in the market, they will be seeing that okay, rates is something that boring, is just gonna buy and hold. But this year we might see, besides of the dividend yield, we might see some capital gains in the rates, especially increased interest in rates when US side they are cutting rates. Okay, so the returns on the USD funds, it would be lower. Okay, so some of these funds, they need to find a higher returns. Okay, a higher returns fixed income assets, and REITs, Malaysia REITs could be one of them. Okay, yeah. So if you are our client, you can uh retrieve this list of the REITs from our websites. Okay, from our platform. Okay, yeah. So these are the list of risks that we have in the markets, and we can see there are a number of them. They are actually more than 5-6% dividend yield. Right. Okay. So these are some of the risks that could attract some of the trading interest and also some buyings from by all these funds. Okay. Yeah. So we talk about banking, we talk about rates. Okay. Consumer in last we come to consumer index that we have been talking, we have been um mentioning since the very first page of our sections. Okay. Yeah. So if you have any questions, okay, before I continue on the consumer index, if you have any questions about the banking, about the rates or any other sectors, okay, or companies, maybe some Maybank, the outlook for the Maybank or what, okay, you can always feel free to drop into the in the comment and we can go into it in more details. Okay. Yeah. Otherwise, this section will be me one way talking already. Okay. Yeah. So before we see any questions, we just continue to carry on with the outlook for the consumer index. Okay. For consumer products, okay, for consumer products and services, we are seeing that it is actually going on a very healthy uptrend. Okay, we can see that for these three lines, they are actually uh moving average, whereby the blue line is the medium term moving average. Orange one is slightly longer term. Okay, the red one is the 200 moving average actually. Okay, so we can see that starting in September, we are seeing the consumer stocks or they start picking up. Okay, has been trading above the moving average, and since then it has been trending healthily. Okay, at this point, although we are seeing some profit taking coming in after the rally, after recent rally, but we can see that it is still holding really well at the midterm moving average, whereby we can expect that it could continue to hover or even break higher to form into a higher high and trending upwards. Okay, for consumer index. So for any of you guys right here who are interested, who wish to know, hey, 99 Speed Marts or Eco Shop or Padini or Spritzer or Life Water, okay, all these are the consumer stocks. Have them been high? Okay, it could be okay. So for all this, we need to visit their charts individually, okay, to determine whether they still have the momentum. But if we look in overall the whole consumer in sector wise, we are seeing that consumer index is still holding really well along with the medium term moving average. Okay, yeah. So it's still considered still at a low risk high reward kind of stance. Okay, with potential further upsides. Okay, especially we could expect another retail sales growth that gonna contributed by the second tranche of the MySara. Okay, we know that MySara just another 100 ringgit just been credited into all of our IC okay over the weekend. Okay, so what we're seeing in September is with this MySara came in with had actually a spike. Okay, we had actually a spike in the retail sales growth. Okay, so it has been more flattish since then, but with the new 100 ringgit being credited in, and also it comes along with we just had right now is the festive season. Next week we're gonna have Chinese New Year, and following that we're gonna have Hari Raya. All this should contribute into the retail sales, and we should continue to see the consumer counters, the retailers continue to be able to outperform the other sectors. Okay, yeah. So that's why we have been talking about consumer, and that should be something that we really want to pay more attention for the coming 2 to 4 weeks or even until May, whereby we would see the earnings for the business activities in January to March. All right, okay, yeah. So we have done with rates, we have done with banking, we have done with consumer. Okay, let's look into some of the index, some of the sectors that have been really hot, actively discussed, widely traded by the traders for 2024, 2025. Okay, I believe all of them they are construction index. Okay, we can see construction index is one of the sectors that actually able to recover all the way back to the high. Okay, but unfortunately, it's has gone into a sideways since September, October. Okay. Yeah. So you can see that this is also the time whereby we are seeing the consumer stocks, consumer index start picking up. Okay. So I would say that it's generally it could be a fun rotational. Okay, fun rotational from construction because it has rebounded to the high level and it rotates slowly into some of these consumer stocks amidst the anticipation of a stronger ringgit and also with higher and sustainable consume private consumption spending. Okay, yeah. So as for construction right now, this year we should still continue to see some of the essential infrastructure work like flood mitigation, all these things to continue to go on. And we are also seeing data center expansion project. All this we there are still a lot of all these big names they are expanding into data center in Malaysia. So all these projects they are still ongoing, and this year should be the year whereby we would see some of these projects, some of these awards that being contract that's being awarded last year. They start to see all this reaping the fruits from all these contracts. Okay, yeah. So for me, I would say that at this moment with this pullback on the construction index, it actually gives us a potentially a good chance for us to look into some of the blue chips, some of the good one, to see whether which are the levels for us to do some accumulations and invest into it. But the good one, yeah, that have been getting contracts, they are able to their assets to able to realize some of this profit, some of this revenue. Okay, yeah, not Archie Akawa. Okay, yeah. So especially one thing that we have to be aware is we if we are trading into construction counters right now, we are buying into a retracement, buying into a downtrend. Hence, we really want to size um our position small. Okay, we really want to do it smaller, and so that we have enough bullets to collect it bit by bit. Okay, uh, because we wouldn't know where it's low, right? Okay, yeah. So that's why we just be careful and try to do it slowly. Okay, so besides construction index, as for the property wise, we are seeing that's very different from what we have been seeing in construction index. Property index has been picking up. We can see that we had a very strong surge in the beginning of 2026. Okay, it actually had a jump. Okay, had a jump, and it seems like it continued to trade higher. Okay, yeah. So property index it has been more quiet, more steadily trading for the year of 2025, and this year it seems like 2026 it seems like the year for property index instead. Okay, one of the thing that's being announced today is Johor Singapore SCZ. Okay, the blueprint, master plan, all this thing is likely to be launched in JB. So I believe for those who are interested to trade into some of the property counters, you might really want to put more focus on Johor related, those that have land banks in Johor, um Johor related property counters. Okay, especially with JS Zach topic discussions has been right now is coming back among us. Okay, some of these counters could be good to look at. All right. Okay, specifically which ones, then we have to take it out and talk it privately. Okay, yeah. So then of course we have renewable energy. Okay, we do not have a renewable energy index. Okay, it's a subsector of energy. Okay, but if we look at the one of the market leader of renewable energy, the EPCC player, SolarVest, the key leader, we are seeing that despite a very good rally in the year of 2025, it seems like it's hits a high and has been trading lower. Okay, at this moment, if we look into technically, it is a topish patterns. Okay, you can see this rounding top, and the support it will be somewhere around 1 ringgit 60 cents. But of course, right now it has come to the very immediate support at 2 ringgit 20 cents and start bouncing off. Okay, so this selling down, it comes amidst that market still anticipating that we're gonna have our SS6 tendering. We are still having up launching all this. Okay, but mainly the results, why the price been driven down right here, it could be due to and anticipations of a lower profit margin that's all these EPC players gonna experience, whereby the China side, they have been pulling hand back and also controlling on their all these chips, all these solar panels pricing. Okay, so that could affect their profitability, and hence we are seeing they would be more profit taking coming in, especially at this point. Maybe the market has been seeing they have been a little bit overvalued at that time. So right now, this movement over here, right over here, from for solar bass from 3 ringgit 40 cents to 2 ringgit 20 cents, it could be more towards markets is a tug of war between the bull and bear, trying to find the balance spot where is the correct place, the correct pricing for solar vest. Okay, yeah. So what we likely to see is it would be more towards a zigzag trading, sideway range bound, until if have finalized to say that, oh, this is quite a balanced level that we're gonna be, and then it will go sideways until we are seeing more catalysts. Okay, it could be LSS7, LSS8, because this energy transition thing is not a day thing. It is a 30, I think it's a 30 to 35 years targets that we're gonna achieve. And it will continue to create the demand for that. Okay, yeah. So last but not least, okay, we have been talk through some of the sectors, all this, and for the month of February, last I'm gonna end my sharing, okay, with the February seasonality. So I have compiled the past performance for all these sectors, and also FBM, KLC, and small cap for the past 10 years, how they have been behaving, how they have been doing for the past 10 years. And if we compare all of them, we can see that for February wise, um, generally FBMKL said the blue chips index still will be outperforming compared to the small cap. Okay, and for the sector wise, we can see that some of those that outperforming for the past, for historically, will be energy sector, plantation sector, financial services, and also the telecommunications. Okay, but if we look into deeper into it, we can see that for energy wise, it was lifted by two years in 2021 and 2019. Okay, for plantation wise, is by 2022, it's a wallop 27% jump for that year, and that's actually lifted the whole average figure. Okay, and finance wise, financial services is quite steady. Okay, and telco, not too bad. Okay, telco not too bad. Actually, telco we can see is steadily about like 2% like that. Okay, yeah, just is whether it spots up 2% or down 2%. Okay, yeah, so telco is actually quite okay as well. Okay, but if we look into the percentage of winning, closing positively for the year, okay, we can see that the constructions, okay, despite that the average is pretty much flat. Construction, 7 years out of 10 years, they are in green for the month of February. Okay, consumer as well. Okay, consumer as well. And actually, if we see consumer, the average return is actually about like 1%. And if we look into recent year after the COVID, right over here, it's uh more towards the COVID year right over here. And then after the COVID, we are seeing more picking up in February. Okay, spending in February. Okay, it's still near to the 1% with the high hit rates. And unfortunately, plantations in recent year is better. Okay, in recent year is better. And also, if we look into the CPO price is also catching up. Okay, so probably plantations at this moment, plantations index is moving more flattish. Okay, but we are seeing the pump price is catching up. Okay, so maybe plantation sector is actually also one of the good sectors to look at. Okay, to put an eye on it. Okay, but no doubt we can see that financial services is the one that outperform for both sides. Okay, with 80% hit rates and also on average 1.55% returns on average. Okay, yeah, but out of all this, we really want to avoid utilities in the month of February and also healthcare. Okay, yeah. So these are the two sectors that we really want to avoid, especially the healthcare. You can see for the past, I think 7 years, none of the months, none of the February, none of the year, they able to close in green for the month of February, especially like healthcare. We know glove is one of the main 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 subsector in the healthcare. With the stronger ringgit, they could be impacted as well. They might suffer some of the forex losses. So healthcare is really something that we really want to avoid touching for the month of February. Okay, yeah, and very similar talk view on the technology as well at this point. Okay, yeah. So yep, that will be all what I'm gonna share for tonight. Okay, so if you have any questions or if you're too shy to ask in today's actions, you can always um drop us a WhatsApp at this number. Okay, and we will attend to you personally. Okay, yeah, and also if you are interested to explore more with us, okay, you can always find us at our social media, okay, under all these accounts, or you can also scan this QR code to open an account with us, and we will, and my team, we will have a dealers or to assign with you and help you through, okay, to do better in the markets. All right, okay. So if you have got any questions, you can always feel free to put into the comments, okay. Otherwise, we're gonna end the section today. All right. Okay. It seems like there's no questions at this moment. Okay. So we're gonna end our section here today, and and I shall see you again in March. Okay. All right. So, okay. Thank you very much, everyone, and enjoy and early greetings. 恭喜发财 for those who gonna celebrate Chinese New Year and enjoy your happy Chinese New Year. All right. Thank you. Bye bye.